Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 2nd of October 2019, and we're commenting additionally on our alert yesterday, where we saw some of the poorest manufacturing data coming from the United States for some 10 years. So let's investigate. Yesterday afternoon, we published an alert video highlighting that according to the Institute for Supply Management, US manufacturing activity, quote, contracted to its worst level since June 2009, unquote. At the time, the Dow Jones fell from 100 points up to 151 points down, while during the remainder of the day, it fell further, to the point at which the Dow was down some 343 points at 26,573. The Nasdaq was down 90 points at 7,908, and the S&P 500 was down 36 points at 2,940. Gold and silver, of course, rose, but nowhere near the levels they were at last week. Now, we pointed out in that video, and in our weekly update on Saturday, that Friday's non-farm payroll figures were all important, with midweek figures also having an influence. So we thought it appropriate, in order to reinforce that message, to read a report published by Reuters today, which basically stated the same thing. And we have put it on screen so that you can see it. And here it is. Gold edges higher as US data fans slowdown fears. By Diptendu Lahiri, October 2nd. Gold prices edged up on Wednesday after rising as much as 1% in the previous session, as disappointing US manufacturing data fanned fears of a sharp global economic slowdown and stoked bets of further interest rate cuts. Spot gold was up 0.2% to $1,481 at 0736 GMT. Prices hit a near two-month low of $1,458 on Tuesday, before climbing as much as 1% during the session. US gold futures were little changed at $1,488 per ounce. Considering the risks to the global economy, gold is still a strong safe haven asset, said Philip futures analyst Benjamin Liu. US manufacturing activity tumbled to a more than 10-year low in September as lingering trade tensions weighed on exports, fanning fears of an economic slowdown and raising expectations that the US Federal Reserve could further ease monetary policy. But Liu added, quote, until and unless Fed gives really strong dovish signals, we will see gold trading around $1,500, unquote. Lower interest rates reduce the opportunity cost of holding non-yielding gold. The data also prompted President Donald Trump to lash out at the Fed, saying the central bank has kept interest rates, quote, too high, unquote, with a strong dollar hurting US factories. Markets now await US non-farm payrolls data due on Friday to gauge the state of the world's largest economy amid its bitter trade war with China. Quote, I think the market does not want to rush ahead of the non-farm payroll data in case there is a surprise hit, unquote, said AxiTrader market strategist Stephen Innes. Investors are a bit scared. This emotion will probably inhibit people from jumping back into the gold bandwagon over the near term. They're going to need some convincing. On the technical front, spot gold may consolidate in a narrow range of $1,462 to $1,488 per ounce, or bounce towards $1,514 as its short downtrend from the September 4th high of $1,557 could have temporarily ended, according to Reuters analyst Wang Tao. Among other precious metals, silver was up 0.3% to $1,728 per ounce. Platinum was steady at $876, while palladium edged down 0.4% to $1,645. So Friday is potentially crucial. But before then, we still have the ADP employment data out today and non-manufacturing figures tomorrow, all of which will give the Fed an insight into how the economy is faring and whether rates should be reduced further at the end of this month or not. It's quite heartening for us to see that other analysts are agreeing with our prognosis and forecasts, and we agree in large part to the gold price predictions written in the report, though we were expecting gold to bottom around $14.50 instead of the $14.59 that it did reach. Okay, we were out by $9. It can still do that, of course, but we doubt before Friday. And if the employment figures are worse than expected by a large margin, then we can expect gold and silver prices, but primarily gold, to rise a little further from current levels. Equally, if the figures are stronger than expected, then we can expect to see precious metal prices dip further. Always with an eye on the dollar index, which is currently standing at 99.35, compared with the 99.43 it was when we reported last. It's therefore down a little, but still considerably higher than many other commentators forecasted. Finally, if we are a little slow in the next couple of days in replying to comments, please forgive us, as we're preparing a nice treat for Inner Sanctum members, which is taking up quite a lot of our time, while we produce for general release 1 or 2 videos a day this week because of the exciting information and news and economic data and political skullduggery going on. But rest assured, we will reply within 48 hours and sooner where we can. Thank you for listening. Do share your thoughts. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.